That's what I spent $120,000. Borrowed money, by the way. I took 5 of my partners with me to the boot camp and trainings, and 3 of them quit. No, 2 of them quit. We were 3 left. That's right. We were 3 left, and we scaled up. That's my ideal investment group, ideal management group. We did amazing work together. Then I started my own company in 2014, November, when I bought 192 units. Just a brand new company, Monal Investment Group and Monal Management Group, and just took off like crazy. That's 10 years old. Only 10 years old, brother. Wow.
It's amazing how fast it can happen. But for the investor who has never done a deal, let's say they're the engineer or the company manager or owner, the IT technician who's saved up $500,000 in the stock market over the last few years, and then that grew because the stock market grew, and maybe they're sitting on $1 or $2 million. If they want to pre-sell and get their money into a deal, but the deal's not ready yet. So let's say they're shopping investors, and the operators like Vinney, you 2 months ago didn't have this deal. This hotel wasn't there. You were taking what's called soft commits. So you were taking the idea of the deal and saying, okay, the idea of your liquidity, because some of these people also are selling a business, or they are selling a piece of real estate, or they're going to sell stocks, but the stock market's down right now and they're waiting for it to go back up. So they're not super liquid, but they know they want to be. Can you just describe what the value of the soft commit is, where its place is in the business, and how a passive investor should look at that? How they can prep for soft commitments, because that's something we never talk about. We never really talk about the soft commit and like how that is pre-selling, right? That's me saying I will get my money there, but it may not be there yet.
You know what? Can I mention, this is the best thing you asked me. See how I started from one investor, and then we have 582 investors now in our very strong database, right? The key thing is you got to educate. Don't rationalize. Do not rationalize. If this person in my family, uncle, aunt, brother, sister, everybody's looking to make passive income. I mean, economy in USA, people are under debt and everything, and both husband wife work, all that thing. All these savings they have to put securely in an instrument to get cash flows monthly or quarterly. That's the mantra, number one. Stock market up and down, if you don't know, you can lose your shirt and pants and everything. But real estate never goes to zero overnight. It never does. It appreciates. And then the tax laws are built in USA for real estate people, investors, because the property that you buy for 10 million in residential, let's say apartment complex, IRS says it'll be worth zero after 27.5 years. Hold on. After 27.5 years, it might double in value. It'll be worth 20 million in that year, that long. IRS says it will be zero. So you take out depreciation, which every year you depreciate the value of the property on P&L.